Hello Forex traders, welcome to this amazing channel. I'm CJFX. My name is CJ and I'm a Forex trader, as you all know. So to go straight to the point, I'm going to be analyzing most of this all this pair here, but on a separate video. Today on this video, I'm going to be analyzing GBP USD and what I'm seeing and how we are going to be taking advantage of the trade. Now, before I go to the chart, let me just advise some traders that are just starting, that are just coming into the game, or maybe you have been into the game but you want to give up thereabout this and that. So the little piece of advice or the advice I want to just give you is that don't be in a haste. Follow the process. It's a process that gives you the edge. It's the process that will make you reach your goal. So what will you do? Follow the process instead of chasing the fame. Follow the process. Do you understand? If you know that you already have an edge, learn the skill called waiting. If you wait, your money is still safe in your pocket, isn't it? But if you are in a haste, what will happen? You blow your account. You start from square one. So to keep things, let's go straight to the point. On GBP USD, I'm going to be doing the top-down analysis on GBP USD. As you all know that I'm a top-down analyst. So going to GBP USD, and let's see what the market is doing. Before I go to this chart, if you know you have not subscribed, please kindly do, because when you do that, it will help. Kindly subscribe, like and subscribe, because when you like and maybe you subscribe, it will help my YouTube algorithm to be able to make my videos to be able to go viral, reach other traders that are also having issues in trading, so that they can be able to like my content, because I'm seriously trying here. Do you understand? I know that I'm currently starting at the moment. I've not yet reached big, but if you go to my trading, if you go to my each of my videos on my channel, you will know that I'm not playing here. I'm not playing here. There's what they call there's an adage that states that it's not all about being fast and fall, but being steady and consistent. That is what I'm doing. That is my that is my goal. So far I know that the end goal is big, and what I'm doing will get me there. I rather be slow and be consistent to reach my goal than be fast and not reach my goal and fall at the end of the thing. So that's my goal. I'm a kind of trader that I'm always transparent. I'm very transparent. So let's go to the charts before I will talk out all the whole time in this. On GBP USD, I'm a top-down analyst, as I said that. As you can see, I'm currently waiting, and you can see that I placed my alarm at that place there, so that anytime markets touch there, I'll get an alert or a notification that market has crossed over this part, this and that, market's about to this and that, so that I can just come to the chart and just see what I'm going to do. If it is time, if market is this and that, so that I can just start monitoring it at that moment. But like this now, I'm in the period of waiting, and in the period of waiting, I fold my hands and let the market do its thing. If the market want to move upper, let him move. If the market want to retest back to that zone, let him retest. It's better that I kept my account safe than lose it, because if, God forbid, I lose the account and later on tomorrow I now see a very nice setup, which money will I use to trade it? Will I go and steal? But if my money is still in my account and I'm still waiting for my setup to form, I'm not in a haste to make money, and I see my nice A plus setup, I will still have a lot of money to trade that setup. That's what they call discipline. So you have to discipline yourself in order to be a trader. Don't carry the mentality of I want to make money quick in this industry. You will not go anywhere. So let's go to, I'm a top-down analysis, so I'll be starting from the monthly time frame, scrolling to the 4-hour time frame to check for what's going on in the market and how we'll be able to take advantage of this. Now I'm going to the monthly time frame. As you all know, on the monthly time frame, I'm going to be taking out this alert because I want to make my chart look very go out now. So on the monthly time frame, breaking down this chart, doing top down analysis is the best that you can know, because once you know the direction from the higher time frame and you scroll down to know what the market is doing using market structure and using price action to guide your analysis, then you scroll down to check for your entry and exit. You check, does this time frame correspond with the monthly time frame direction? All right, then I can scroll to the next. I can go to the next time frame. Have I seen my entry and exit strategy? Yes. Therefore, I can enter trusting my edge, because the market is full of probabilities. Do you understand? The market is a game of probability. The market can do anything at any time because you are not the one controlling it. So let's continue. I'm not an SMC trader, so I'm a price action trader using break and retests. Did you get me? I'm a top-down analyst, a correct top-down analyst. So now on the monthly time frame, you could see the market was creating lower highs, lower low, lower highs, lower low, lower highs, lower low, equal high, equal low, equal highs. Then it broke out. It's so to come back here and create a lower low. It created a high, but the high was not able to break out to create a lower low. Rather, it held at this resistance zone, at this resistance zone that later on at this support that later on changed to resistance zone. As it broke out and now changed to support again back. So this support zone held the market from coming back down. So eventually, you know that when market crossed to the next zone and it refused to break out from that, refused to bounce from this zone back down, it automatically will move to the next zone, because you know there's a theory that states in price action, the market move from what zones to zone. I will not hide anything here. I'm trying to break down. This is how I analyze my charts. So as I said, I'm a very transparent trader. So it will what will I get from hiding all this information, this and that? The main thing, strategy is just 10%. That's what I grade it as. You get me? Sorry for talking too much, but I need to. Strategy is just 10%. Discipline, psychology, and risk management is everything in this game. In fact, psychology is 60%, while 30% is risk management. Because your psychology, you have to be disciplined in order to make your psychology to be right. So psychology and discipline moving hand in hand. So I'll just say psychology and discipline are one, risk management on its own, then technical analysis 10%, risk management 20%, then okay, risk management 30%, then psychology and discipline 60%. So when you have this, forget about the technical analysis. Psychology and discipline and risk management is the main thing in this, because you can master your strategy in between 3 months. Then the next 3 months you can get your edge. That's if you're a very fast learner. But to understand yourself, to be disciplined, to follow your rules is very hard as a human being. So therefore, it may take you a year, it may take you 2 years. That's when you see some traders who will just be exhausted and say Forex is scam, this and that, blah blah blah, because they have not fully mastered themselves. You get me? So back to the analysis. As this candle here, let me go back closer to this thing so that I can show you. what I'm seeing here. So you could see this candle here. Market came here, created a weak rejection. I'm just trying to use price action here. Created this engulfing candle that engulfed these two candles here, monthly candle, went back up to this place here. Now created this pin bar. Now you could see the reaction on this zone. I want to show you how to find direction on the monthly time frame. You could see reaction on this zone, showing you the market was currently reacting on this zone. Instead of it to pull back down, it now had the ability to break out up. So you know that since market has broken out, then eventually there must be a retest back, a continuation, because market will be eyeing back. It will be like, okay, after this zone, which zone will be next? It will be this one. Do you understand? Then when market comes to this zone, then it will now start being it will now start making, it will now be an area of decision making between the buyers and seller. So you could see the market broke out from this place. You understand? The next zone will be here. So market, instead of market to come here and create a lower low, it now violated the market direction. You understand? So as it went back to this point, the third touch of the trend line, because there's a theory that states that the third touch of the trend line, market must, and it's always respected 70 to 80 times out of 100%. You understand? Especially when it corresponds with Fibonacci support or resistance zone. You understand? Together with a trend line, it always respects it. It does a magic, a very nice trick. So as you can see, market came to the third touch of this trend line together with a resistance zone. You understand? If I was able to, let me see if I can plot my Fibonacci at swing high to swing low. Let me see if it will correspond to that zone there. If it does, okay, it did not correspond to it. So let me see if I can adjust it. But still, even though it does not correspond with a Fibonacci, so far a resistance zone or a support zone intersect with a trend line, that point there is a very valid point where institutional traders, the big banks, this is a clue I'm giving you free of charge, will be likely to buy or sell from. I say it again. If you see a resistance zone or a support intersects together with a trend line, be it matches with Fibonacci, but the more, if it matches with Fibonacci, the more odds it has that it will bounce from it. But even though it does not match with Fibonacci, it is very valid. Do you understand me? So back to this, you could see here that market came back to this zone and bounced back from it. Came back as a bounce back, because I told you market will come back here and make a decision making. As it came back to this place, it decided between the buyers and sellers either they should break out, retest, and continue to the next zone, or bounce back to this next zone. So you could see that market came to this place, bounced back, and it came back to the same zone here. Do you understand? So this is to tell you that market moved from what? Zone to zone. Now, finding the directional bias. This is one. This is market structure here. I just broke out down for you. Market came back here, creating a double top on the monthly time frame. This is the neckline of the double top. Market is supposed to come back to the neckline and break out, come back down, creating a what? Higher, creating a lower low, respecting the market direction as bearish. But you could see the market came back above it, retested, then violated the trend. Now, even though market comes to this place, at least it's supposed to come and still respect the market direction. But you could see this support zone here held the market from moving further below. Do you understand me? Held the market from moving further below. So we could say that, okay, market does not want to go, but let's see what market is going to do. This trend line here is supposed to hold this thing and push it back, but you could see the market broke out and retested back on it. So this is a trend line break, retest, continuation pattern. Are you listening to me? This is a break, This is a trend retest continuation pattern. So this direction now is what? Bullish, using the law of what? Price action, because market move from what? Zones to zone. The next zone that market is going to be eyeing will be what? This next zone, because market has bounced back from this support zone here, and not just support zone, it broke out from the trend line and also retested back on the trend line, creating this reversal candlestick on the monthly time frame. So therefore, on the monthly time frame, the directional bias is what? Bullish. So anything we'll be looking for will be what? Buys. Now, going to the weekly time frame. The weekly time frame, I normally use the weekly time frame to search for chart pattern. Maybe in the monthly time frame, I found that the market is going to be going for market is going to be going up. That is buys. You understand? That means, let me say the market is bullish on the monthly time frame. But on the weekly time frame, I now found out that I now saw a chart pattern that is going to be contradicting to the directional. That's going to be contradicting to the direction of the monthly time frame. So instead of me to follow the direction of the monthly time frame, I will now start focusing on the weekly time frame chart pattern, showing me that what is a reversal. I will be focusing on the reversal chart patterns, look like head and shoulder, double top, inverse head and shoulder, triple bottom, triple top. You understand? That's the ones I focus on. You understand? On the weekly time frame. Yeah, get me? And on the weekly time frame. So weekly time frame. So each time frame has their uses. As you can see how I'm breaking it down, making it so easy, sounds so easy, juicy, simple. Now, each time frame has their uses. So monthly time frame direction, weekly time frame chart patterns. You get me? And I've told you the chart patterns that I focus on. So you could see that this is a clear break and retest here. Reversal, created this reversal candlestick. This was last year. Market created this thing. When I saw this, I knew the market is going to eventually come back here. Though I could see the market is going to go back to this zone here, but finding an entry, a suitable entry, risking a very smaller amount of money to catch a massive spike to the upside was hard. So I have to fold my hands and let the market do its thing. Do you understand? See, it's better to fold your hands and let the market do its thing and make money when the market starts giving you nice setup than blow account when the market has not started giving you any setup. It's just like you, a captain driving a boat without knowing direction. So like this, now we had a break retest continuation pattern. Do you get me? So we're going to be going to the weekly time frame to check for any chart pattern, because I don't see anything stopping this thing going to the upside, because this thing has created this chart pattern. This thing has creating this bullish engulfing. Market has crossed below this thing here, so I'm going to be waiting for a pullback continuation. That's if I see a pullback. Now let's go to the weekly time frame. Not a pullback on the weekly time frame or on the monthly time frame. Don't get me wrong. I said each time frame has its uses. Now on the weekly time frame, I saw a clear head and shoulder. This is a left shoulder, this is a head, and this is the right shoulder. This is the neckline of the head and shoulder. And on the neckline of the head and shoulder, I could see a first touch, second touch, and third touch. So market is going to come here and eventually create a third touch. That it if it does, but my main concern is market should respect this head and shoulder and pull back to it, doing something like this. So you can see the way the monthly time frame and the weekly time frame directional bias are corresponding to each other, telling us a very high probable trade. This is a very nice way of doing your top-down analysis to give you a clear directional bias, not to be in haste, but to be more confident in what you are doing. Because when you want to click that button, this is a war. This market was not built for you to make money. It was built to take out money from you. So in fact, you are fighting war. And when fighting war, you're supposed to know the strategy that you use to win it. Do you get me? If you've watched House of Dragon, if you've watched Game of Thrones, if you've watched The Last Kingdom, you will understand all these things I'm talking about. If you've watched Money Heist is even the one self that I love the most. Strategy, thinking out of the box, thinking like a grandmaster, 5 step ahead. Do you get me? So I'll be waiting for something. Okay, I'm coming. I'll be waiting for a pullback to this neckline, then I'll be riding it to this point here. So I'll be holding this trade as a swing trade. The market hits that point. I repeat again, I'll be holding this trade to market hits that point. Now, what is the secret of entering trade when knowing that this market is full of probability, risk management, and edge? When you have your edge, what is an edge? A edge is a specific pattern that you have observed that has occurred over and over again, in which you were privileged enough to observe it happening over and over again by you keeping track records of your trading plan, of your trading style. Now, that is an edge. Now, and when you put it in, when anytime you use it, you find out that it always work for you. It always work for you. Then later on, you now use it for testing, for testing first, using a demo account, because that's what is the use of it first, using a demo account for at least 100 good trades. Out of the 100 good trades, you now calculate how many times was this pattern, this strategy that I used, how many times did I win with it. If you found out that you won 50 times, you now say, what was the risk to reward? What was the disadvantage? Now you now find out that wow, this thing works. Out of 100 times it works. Then you now say, wow, I've gotten an edge, because it's the edge that gives you confidence in clicking the button. Do you get me? So you trust your edge, and you risk using risk management, because you know that my edge works, gives me confidence, but the market is full of probabilities. Anything can happen at any time, because you are not the one controlling it. For example, if you are trading US oil, somebody can blow pipe in one country or another, and market may fall, market may rise. If you're selling, market may rise and hit your stop loss before going back to your direction. There are all these kind of things. Or you can say pandemic, this and that, this country were fighting, and that's the reason why markets. So anything can happen at any time. You don't know what is happening, because this is a game of probability. That is the reason why you should risk. Anytime you are risking, you should always be consistent. The risk must always be consistent. You should not risk today 5 naira, next tomorrow 1 million, next tomorrow 1 billion, next tomorrow 7 trillion. No. If you're risking $100, you should always be consistent in it. Consistent. There should not be addition, and there should not be subtraction. Only when there should be subtraction is only when you are not that sure of the trade. Maybe it does not match. Then you can just say, okay, instead of me to use this so and so, let me reduce my risk. Now, how do you choose a risk management plan? A risk management plan is not stated in any way. It is by you. How many times am I willing to risk this my capital? That how many times, how many life will I have with it? If I risk this so and so capital, how many life, how many times will I be able to stay in this game? How long will I stay in this game? So these things gives you more confidence to continue trading the market. That is the secret that no trader or any of the trader will tell you, but I'm telling you the truth. So to stop all the chit chats, let me go directly and tell you that's what I'm seeing. So I'm expecting that thing to come to the neckline of the head and shoulder. Now, going to the daily time frame, this is where I usually sit to make my main analysis. Do you get? When the daily time frame corresponds with the monthly time frame direction, then I'll be like, wow, nice. It is nice to trade. But when the daily time frame, because the daily time frame is just like, it has its own mind of its own self. It has the ability of disrespecting the higher time frame direction, like the monthly time frame direction. If the monthly is going up, it has the ability to say, no, I don't want to go up, I want to go down. Do you get? But when the both of them are united, the both of them are saying bye bye, then you can now say, okay, let me scale down to another time frame that I'll be looking for possible entries. Because if you enter on the daily time frame, your stop loss will be very big. But if you scroll down to the 4 hour, 1 hour, or 30 minutes, 30 minutes or 1 hour self are those ones I don't like going to. You understand? So you will get a very nice stop loss and a very good to risk to reward, because me, I'm a swing trader slash day trader, depending on what the market is giving me. You understand me? So going back to the daily time frame, let's see what the daily time frame is saying. So on the daily time frame, I could see that the daily time frame is also what? Bullish. How did I see that the daily time frame was bullish? If you check my previous videos, I caught some of this move. Okay, it was in Euro USD, I think. Did I make videos on this when I caught this? I don't know, but you can still check my videos, my preferred videos, and see what I saw before entering trades. You get me? But I think everything I made, I said they happened, and I also took advantage of it. But I don't like posting my wins, my losses. No, I've not reached that stage yet. You understand? But hoping to God I'll reach the stage, and when I do, I'll be posting it back to back, my wins, my losses. You understand? I'll be very transparent because I like to be transparent. Now on the daily time frame, let's reanalyze. On the daily time frame, we could see that market has created a double top, a double bottom, retested on the neckline, went back, creating higher highs, higher lows, higher highs, higher lows. Do you understand? You get me? So market came back and tested further pullback, because all this minor pullback, I don't ever like it. You get? Market came back to this place here, retested it, then spiked up. But you know that they said that to any impulsive move, there must always be a consolidation, either a sideways consolidation or a pullback consolidation. So there's a pullback consolidation, just like this we'll be expecting here. Do you understand me? Just like this we'll be expecting here. So as you can see, market now is reacting at this above side here. We are just hoping and we are waiting that market may pull back to this place, matured pullback. Now, if we could draw our Fibonacci from this swing low, from the tip of the swing low to the swing high, we will find out that market created a very nice point. Market also intersects together with the neckline point of interest, that is the support zone. So we're waiting, we're expecting a pull to this 50 fib retracement level or 60 fib retracement level, depending on where market want to, but I'll be expecting to come further to this 0.6, that is 60 retracement level, my Fibonacci level, before bouncing back up. You understand? Before bouncing back up, and when it does, we will catch it to this point, to that point. So like this is where I usually stay. Anytime I want to analyze this on the daily time frame, I will come and stay, analyze, do my analysis, my main analysis. After doing the top down analysis, then when market has pulled back to that support zone, then I can now say I want to scale to a lower time frame, like the 4 hour, in which I like using the most, or the 1 hour time frame, or maybe at least, or at minimum maybe 30 minutes. Understand? To check for a very nice setup to enter. Like for example, now the 4 hour time frame, scaling to the 4 hour time frame, then I'll be using what the market will give me and enter. Now if you check on the daily time frame, you can also see another trend line, but I don't like drawing too much of things on my on my chart because it makes my chart look very nasty. But you could see that this is a very nice setup for a really zone. You understand? So if market pull back to this point here, or when market pull back to that intersection point there, where is this my cycle stuff? So when market does, I'll like to enter trade at that point, then drag it to this point here. So if you check the pips, you see at least is it 500 pips at or but it's not 1,000. Okay, it's 600 pips. So it's very nice. So why wouldn't you wait and catch this juicy setup? Why wouldn't you wait and catch this juicy setup? Why will you be in a haste? If the market decides to start going up, are you the one controlling the market? Are you? So guy, patiently wait for your setup to mature. The day you become a patient trader that always wait for a setup to mature, that is the day you can beat your chest and say that you are a what? A forex trader. That's when you can say that you are a forex trader. But if you don't have the ability to wait, then you are a gambler. You are not supposed to call yourself a trader. You are supposed to call yourself a gambler. You're supposed to you're supposed to classify yourself under those people that usually watch football and count their odds and say Man U will win, Chelsea will win 1/2 or 1 - 1 or +1 or times 0. I don't even know what they usually do there. That's where you're supposed to classify yourself. You understand? So guys, if market should come to that side, then I'll be going scaling to the 4-hour time frame. Then I'll be looking for, it depends on what the market is giving me because I'm a reactive trader. You understand? I'm a reactive trader. So if the market gives me anything, what I'm seeing there, I either enter there. I have 3 ways of entering. The high probable way I usually enter is CTL / circuit breaker. They are one. You understand? That is the high probable trade, and I rate it 80%. It depends on how you apply it. 80%. The disadvantage is the stop loss usually be big, but the risk to reward, the smallest risk to reward they can give you is 1 to 3. 1 to 3, but very, very, very efficient entry model. I repeat, very, very, very efficient entry model. Once it has clicked, forget it. There's over a time that I was like, wow, this is my entry model. Let me risk everything. I risked it countless times, but don't try it. Remember, the market is not certain every time. It is a game of probability. So you have to accept it in order to continue your trade using risk management and discipline. So discipline keeps you in check to always use your risk management, always make you to follow your trading plan, not allow you to go and start using people's signal, all those things. So I've talked a lot and I've forgotten what I was saying. You get? So I'm going to be waiting for a pullback to that 50 fib retracement level. To that 50 fib retracement level here. Then at the bounce, I'm going to be catching the buy. So as I was saying earlier, I just remembered now, I either enter here with a CTL / circuit breaker, you understand, then or I enter with a candlestick pattern. How do I enter with a candlestick pattern? Most of the market will fake out traders before going, then create a fake candlestick pattern. You understand? But since this is a wheelie zone, I'll be likely enter with a candlestick pattern. Candlestick pattern, I give it 30% because I don't like using it. You understand? I give it 30%. While fake out / candlestick, I give it 50%. 50%. If I see a clear fake out, you understand, I will enter inside. But I'm very confident using CTL / circuit breaker. Remember, as I said earlier, I'm a very transparent trader. So hoping to see what the market will do. Hoping to see what the market will do. We're going to be catching our buys. So we're going to be looking for buys opportunity. Buy opportunity. So we're going to be catching our buy from here. The disadvantage of this, if you're a swing trader, you understand what I'm trying to say. So this is going to be a 1 to 7 risk to reward. I'm just rough estimation because I've not entered. This is a rough estimation, so you don't get me wrong. And I'm analyzing for the positive outcome. I'm not analyzing for the negative outcome. That's why you see always analyze for the negative outcome to see what the market will do. Remember, I am a reactive trader. We react on what the market do. The market does not do what we want. We stay out of it and let the market do what you want to do. You get me? So this is going to be like a 1 to 7 risk to reward. The SL is very, very nice and conducive. Then what else? There's something I wanted adding up to this. A 1 to 7 risk to reward, and I think that will be all. So please, if you like my content on how I usually break down charts using top-down analysis, please you can send me a DM. And most don't mind my English sometimes, but the main thing here is that you are getting the idea, the knowledge I'm passing through. You are understanding it and it's sinking in. So please make sure you subscribe and click the bell icon so that anytime I upload a video, you'll be the first or among the first that will be notified. Do you understand? And please make sure you like my video. Please make sure you do like my video because I'm putting more effort on this. So, and not just watch the video, make sure you always follow my video, each and every one of them. Remember, the market is full of probabilities. Sometimes I may pay content on this place here, and sometimes the market may not play out as I want. You understand? Because I'm not the one controlling the market. But if you check it very well, if you calculate all the wins and all the loss, you'll find out that yeah, I'm a very profitable trader. And I'm not coming here to sell you rubbish. I'm coming here to sell you education. And there's another that say if you think education is expensive, choose illiteracy. Now an illiterate trader is only the person that will be buying when the market is selling. Do you get? An illiterate trader is a person that will be buying while the market is selling. So we'll be looking for buy opportunity on GBP USD. So I'm going to be releasing some videos on those pairs that I showed you guys, or I showed you guys before I started the video. So you can also check my previous videos and go and make your further analysis to check how they played out and so on. So please have a nice day. We'll see you on the next class. Thank you.